Good afternoon. Welcome back to the Daily Squeeze. Brian Farr here, VP Stock Analytics with Stock Dads. Welcome back. Today is Monday, January the 29th. We're gearing up towards the end of the month, and it's been a wild one so far, and we are going to be ending this month with a bang with big tech earnings. You got FOMC. We got plenty of jobs data reports. It's what we're calling the Super Bowl week for the stock market because there's so much going on. There's so much outside forces that are going to be coming in to the price action, and maybe some volatility as we gear up for Powell. Now, we're not really expecting any kind of rate hikes or rate cuts from the Federal Reserve, but all ears are going to be on Powell to see if he can give us any clues as to the potential future rate cuts, specifically going into March and even further. So a lot to pay attention to on that side. We did have some interesting weekend news with the Evergrande situation in China. We also have the Boeing MAX 9s back in flight. So yeah, pretty interesting stuff going into the week, but starting things off pretty quiet today. Nothing too crazy. Started off kind of slow, but things ramped up during the afternoon session. But yeah, let's get into it. This is your Daily Squeeze. All right, getting into things, taking a look here at the SPY. This is the daily chart. SPY and the Dow close at record close. A pretty interesting session, to say the least. You know, we started out kind of slow, and we just kind of meandered in this zone here. If we're looking at the 15-minute chart, yeah, pretty boring altogether. It looked like we were going to move to the downside, but things picked up during the afternoon session and off we went. And in fact, we got some interesting treasury news towards the end of the session. There was a treasury financing news, so the bonds went absolutely berserk, catching a bid towards the end of the day around that 3 o'clock period. And yeah, that sent stocks and risk on assets soaring into the close. It looks like SPY definitely wants a nice little date with the 500 mark, but all in all, a pretty interesting day, especially on my day trade sides. You know, who would have thought that the IWM was going to be my main payday today? I went and took in 197 calls for tomorrow because it was so choppy today. I didn't want to get chopped up in 0 DTE, so I went and took 197 calls today for $1.80. I ended up closing those at $2.45 for about a 36% gain on the session, but overall a pretty nice little day trade, all things considered. The only thing that I really added to, we'll jump into these daily time frames. The only thing I added into today was Shopify. I took a very small position here on Shopify for the February 16th monthly expiration contracts for the 85 calls. I went out and got a little bit time. That is also their earnings expiration series, but I just wanted to get a little bit time because we have FOMC. We have a lot of outside data to come in that could impact the market, and I didn't want to get caught up in any kind of short-term nonsense. So I went out and got time with that. First target's going to be around that 85 psychological mark, and then we got this PT fib extension target up at about 87.72. So that's what I'm going to be looking at as far as shop goes, and this could be also a day trade idea for the next coming days as well. So, and the other thing that I had to deal with today was Pepsi. I did go ahead and stop out of Pepsi. We eventually did get a close above 168, which is a close above the 50-day simple moving average. It's just unfortunate, but yeah, we couldn't get this breakdown of 164.67. We might be using that as a launch pad. It could be a pretty interesting idea to keep an eye on this if it wants to use this as a launch pad and push higher. And now you're just getting wedged between the 50-day and the 200-day simple moving average. Something to keep an eye on for sure. But yeah, I ended up getting stopped out on this one. This is my first stop stopped position all month for the month of January. So that's how good swings have been to me this month, and looking forward to that to continue going into February. But yeah, the interesting story today definitely came out of China with the Evergrande news. Evergrande was the largest. Originally, they defaulted in 2021, so this issue has been going on for 2-3 years already, and they were once the largest real estate group in China. I mean, that's how massive this company going under is. I mean, it's a pretty darn big deal. I wouldn't be surprised if China comes out with some kind of new agency or some kind of regulatory body after all of this is said and done. But yeah, the courts ordered the Evergrande to pretty much liquidate about over 300 billion worth in assets, and yeah, and it's because they failed to deliver on what the court was trying to give them with back in December or so. So yeah, the shares are down over 99%, as you can see on this graph. It's absolutely disgusting. They eventually halted the shares once it was down 20%, and they just finally suspended it. So Evergrande shares down, and adios. So there's that. As far as any potential spillover, we just don't know yet. It's probably too early to tell to see if there's any major ramifications here in the U.S. As far as the reports that I've been seeing, it seems to be a pretty contained situation, but we'll definitely keep our eyes on anything that could potentially spill over into the U.S. markets. But as of now, things seem to be mainly being dealt with over there in China. But we've kind of been talking about this for a while. China has been a tricky trade, no doubt about that, especially if you're doing individual China stocks. But if you're looking here at the HSI, the Hang Seng, we can see it's just been top left to bottom right. And even with all the stimulus that they have been pouring into their economy and their stock market, it's still just not enough. So we'll see if they continue to try to pump things up and try to turn things around and get things going. But all in all, a pretty interesting day. Like I said, the SPY closing up into all-time high territory once again as this market looks ahead to the jolts. Tomorrow we get jolts and consumer confidence. Wednesday we get Powell, and we get plenty of earnings out of the way with big tech. Speaking of earnings, SOFI, for once, SOFI bulls can finally clap their hands because SOFI has finally produced their first profitable quarter. So good job, SOFI. From a technical standpoint, the chart is still a mess, so I do want to keep that up, get that out there. Now, you could say that this could be a little bit, maybe a personality change, but we'll have to see. It's not too big of a gap up, but they did close up 20% on the day, closing at about the $9.16 mark. So if I'm looking at this and you want to put on a trade, I would put on a long with a stop below today's low, which is about around the 850 mark for SOFI, and then we're targeting price targets of about the $12 mark for future targets. But yeah, pretty good stuff there. Volumes for lending are pretty spectacular, and yeah, they beat their quarter year over year results, so good job them on SOFI. But yeah, as far as new trade ideas, the main thing I was looking at was Shopify. I'm keeping things light this week, all because of the outside influences that can impact this market, especially with big tech earnings and from the Fed. So if there's any week that you want to trade lightly, especially swing trades, this is definitely the time to either trade lightly or just sit on your hands and let this week pass on by and wait for the dust to settle in. Other than that, day trades are probably your biggest friend right now. Zoom in on those time frames if you use a weekly daily chart. Make your hourly chart, your weekly chart, or the 30-minute chart, your daily chart. Just speed things up again. Use those multiple time frame analysis to set the pictures and move things faster. So that's the way this market is going to get, especially as we get into those earnings and the FOMC. But all right, that's going to be it. Yeah, short, sweet, and simple today. Nothing too much to really report on. Market just keeps grinding on higher, and off we go. Brian Farr here. Y'all have a good one, and we'll see you tomorrow. Bye, guys.